Good morning, trading world. It is May 8th, 2023, 8:26 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook is "We have been steady in this range for weeks, so breaking this range either way is going to be ugly, no matter the direction." The range is the range until you see the fireworks that are going to happen when we break the range. For the last 5 weeks, we have closed inside the market maker's weekly expected move, with the exception of a scare on March 31st, 2023. That was back here where we closed, had a nice run up, breaking the upper edge of the market maker's expected move on that Friday. And ever since then, as you can see, the purple lines represents the edges of the market maker's expected move. We've pretty much stayed in a tight range, with the exception of the other two scares that we had, breaking the lower side here, but coming back in and closing inside, and then breaking the lower edge here for 2 days, staying outside but coming back in and closing inside that market maker's expected move. Now, the scary part about this is that the longer we continue in this range, the more violent the break will be. I know everybody's heard the analogy about the market being a coil spring, and then at any moment it could snap and jump. And that's pretty much what we have going on here, with all the open interest building up in the same range. Now, I've been on record as saying that I'm expecting a huge blow-off top to signal the end of this rallying range, so that qualifies as a violent move to the upside. Meanwhile, I am not crazy about taking many risky longs up here. I do have long positions, but they are relatively low risk, where I bought out of the money calls waiting on the blow off top to happen, and then some that are about to run out this week I'm going to roll out a little further, waiting to see if it happens this Friday. So I have taken this time to stock up on vol spreads, and maybe this week I will buy some iron condors instead of selling them in preparation of breaking this range. In my opinion, it is not good risk reward stacking up too many long positions up here. Now, the weekly outlook on the SPY has a bearish bias, closing below the 412.63 with a retracement expectation of around 408.9. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish. However, we have a gap in order flow left over from last week, which tells me the market is irrational and to be careful because a more explosive alternate thesis may be in play. This brings us to the key levels of the day. Let me bring those up. All right, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 413 area. Then we have our queen resistance at the 414 to the 415 area, and then king resistance 416 to the 417 area. On the support side, we have our jack support at 412, queen support 411 to the 410 area, and then king support, which is rather large, is 409 to the 405 area. The main thesis for today. Give me just a second to make sure this is correct. Alright, the main thesis for today is bullish, closing above the 412.63 with a projected target high of between 413 and 419. The alternate thesis is bearish, closing below 412.63 with a projected target low of between 412 and 408. The main channel we are in is between 397 and 416. Last week, market strength and breadth opened gap up and stayed at a high range until noon when it hit an extra gear to the upside. I expect strength to open strong, but at some point later in the day, strength will start to level out, hinting at some weakness to play out later in the week. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. The futures have a bearish bias for the day with harmony between the technical side, which is bearish, and the quant side, which is bearish. So whenever I get something that extreme when the SPY is on one end and the futures are on another end, I tend to side with the futures because there are much more data points that are being tracked, and the futures are more of a, I have a better feel for futures. This brings us to the scenarios of the day. Alright, here we are back with our first scenario, which is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. I also want to make you aware of the vice versa alert for today, which is we could continue or reverse pre-market and continue lower. Pushing or continuing toward the jack or queen support area, finding midday chop more so around the queen support area, and then after the midday chop we could get a push back up with the same amount of energy or force that we came down with the first part of the day. So this is our rounded reversal day type structure and the vice versa alert for today. The vice versa alert being in blue. Alright, here we are with our second scenario. It is our trend day up day type, meaning we open gap up and start with a push back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance area. And normally we come out the second part of the day and it looks to continue the primary trend of the morning, but a lot of times it winds up turning into a head fake, and we get some type of fade going back in or toward the closing. The other part about today, we do have a rather close target. Well, I won't say close, but there's a target of around the 415 area, and it's possible that we could hit that target and we could fail from there, giving us a failed trend day, which would be a much more sharper downturn once we hit that target. So that is the trend day up. And excuse the diagram, it's off this morning because the end of the day is actually over here. But hopefully you get the gist of it as far as the trend day. Alright, here we are with the last scenario, which is going to be our expanded range day structure. We could get a pre-market rally, experience some profit taking early, bringing us back to test support and giving another try at breaking resistance, but mainly chopping back and forth on the day. So that is our expanded range day structure. In the last scenario, I do want to caution you to be very careful these next couple of weeks or a week, however long it is that we have to wait on this violent event that I've been looking for some time, because it will be very violent, very quick, and we could see the very extreme opposite of that shortly after. So as I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position that we take, and also knowing the risk in current market conditions. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.